What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Tuesday, October 1st, 2024, and we're going to talk a little bit about how we traded SPY today, but we are also going to talk about little subtle changes that I will be making moving forward on how I present these videos. So in the past, everything has been about, okay, this is what we have done throughout the trading day. But moving forward, what we're going to be doing is on these videos at the end of the day or during the evening at some point, we're going to be talking about what we are going to be specifically looking for the next day. I believe that both of those have an awful lot of value. So looking back at the day, yes, there's value in that. But being able to look forward and say, okay, based on the chart, based on these different zones, and based on price action, these are the areas in which I'm looking to take a trade. So it could be a supply zone up top. It could be a demand zone down below. So you can look at the chart right now and realize that, hey, I'm on the 30-minute chart. So this is a 30-minute chart. I like to set up my chart every day based on the 30-minute chart. So let's talk about what I was looking for today and kind of how everything played out today. But before we go there, folks, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is just about every day and sometimes on the weekends. But yeah, here we go. So we're looking at, we had pre-market high sitting up here at 574.37, pre-market low. And as you can see, I mean, this is a 30-minute chart, folks, but as you can see what this did, I mean, it just ran and it ran and it ran, particularly the first hour or so just ran back to the downside. But what I was looking for today, how I set up my chart was I said, okay, I've got pre-market high, I've got pre-market low. Now, if we move to the downside, where am I looking to either, number one, take profit, or number two, look for those reversals? So generally speaking, we like to look for those reversals in 30-minute demand zones. I mean, it just makes sense. So if we look back at yesterday's chart, and this is yesterday's on the 30-minute, you can see very, very closely or very, very clearly that this level right here, so this level, and this is from last Tuesday, you can see how we came down to this level. And we just shot up. And I actually took calls out of this level. I was looking for this level all day long. And as soon as we got to this level again yesterday, it started out really, really poorly yesterday. But we had really, really good price action after we got into this demand zone. So we made a new demand zone yesterday. So I put that on my chart. So right down here at 569, 569.29. And again, we're going to use that same demand zone that we operated out of yesterday at we had 569.29. The one up here was 568.29, and then literally $1 up here, so 569.29. So they're $1 apart. And again, you can see we have the benefit of actually seeing everything after the fact. And then the next one down, what I'm looking at, well, I'm just going to look left, and I'm going to find the next couple of demand zones down low. So we've got this demand zone sitting right here at 566.58 and then 565.98. Okay, so these are the demand zones that I'm looking to take reversals out of. And you can look at it and you go, well, it's a downtrending day, so you're only looking for puts. Absolutely not. No way, no how. You're going to get a reversal. You don't get a reversal every day. But when you get a reversal out of a strong demand zone down low or a strong supply zone up top, guess what? That's where your best play is. That's where you can just get into that play and let that thing go. So let's take a look at that 1-minute chart. So right out of open this morning, and my goodness, if this 9 would have been above this 20 right here, oh, you want to talk about a big play back to the downside. I was not in this play. I was not. It would have been nice to be in this play initially, but I was able to take it. I took this play right here, this double cross to the downside. And I took it for, well, number one, this absolutely was a demand zone. So you're thinking, well, you can take this demand zone back up. There's way too much juice back to the downside. And again, we're looking for the strongest demand zones. So the strongest demand zones, generally speaking, look back as far as you can look. And again, you can look back at this. We ran up. This was a couple of weeks ago. Then we found really good support here and then ran up. But back to that 1 minute. So back to the downside here. I did not catch this move right here. I caught this second move to the downside. Now, You might have heard me say this before. You might have read the information that I have on my website or my trading plan, that the first part of the move, generally speaking, is the biggest part and the best part of the move. If you miss that first part of the move, see if you can get on in the second part. Second part, generally speaking, is not as good as the first part, but it's stronger than the third part. So again, we had this move down right here. We found this support right here. We bounced around. We had this is a 10 o'clock candle. So you see this, this good sized candle right here. As a report that came out at 10 o'clock today. Normally, I don't care about the 10 o'clock candle unless there is, a red folder event. And today there were 2 red folder events at 10 o'clock. So you had this indecision candle. We kind of settled down again, double crossed to the downside through this level right here. And I rode this thing down and rode it. I really thought we were going to take out this demand zone right down in here, but it didn't. So I closed out on this candle right here for a nice move back to the downside. Now remember, folks, the first move is the biggest, followed by the second move. And then after that, you kind of get what you get. I didn't take this move to the downside, but instead I waited for this demand zone down here at 565.98. Again, we're going to go back to that 30-minute chart, 565.98. And you can see this right here. Let me find this volume. You can see all of this thin volume. We started breaching these levels, so it got down here with relative ease. Now you can make the argument, yeah, there's information in this tail in the bottom of this 30-minute candle, but again, I'm just looking for those double bottoms on the 30-minute. Double bottoms on the 30-minute is a good demand zone. Double tops on the 30-minute, those are good supply zones. But anyway, right out of this zone, and again, you can see it very, very clearly on the 1 minute right here. So took the trade. I didn't take it right off the bottom. I actually took the trade right in here. I was looking for a little bit more confirmation, and again, took it out of this zone right here, and so I had it right here with my next zone up, 566.58. And I closed out as soon as we got this punch over the VWAP. So again, it was a very, very nice play to the upside. I did have a losing trade in here. Nice little losing trade. I was trying to catch a next leg up because I thought we could kind of push up a little bit higher out of this zone and maybe take out that pre-market low and go take out pre-market high. But again, it did not work out of this zone. So at that point, I thought, you know what? It's getting, we're 2.5 hours into the trading day. I like to trade the first couple of hours. And then it just ran down a little bit, and look what it did. Again, at this specific demand zone. Look at this thing right here, 566.58. Go off this demand zone. I think this was a dollar candle right in here at 1331. Look at this. But we had this cross to the upside. Then that first green candle was right in here, folks. First green candle above. And again, a really, really even bigger play to the upside than we had earlier. But again, I was not in on that trade. It would have been a nice one to get in on. But again, I caught this play here. I caught this play here. And again, lost a little bit of money on this one. But again, I executed according to my trading plan. Took this double cross to the upside on an otherwise, at least an otherwise, in the short term, move to the upside. And again, I thought we'd take out this stair step, 15-minute stair step, and then start taking out levels up above. Okay, so again, this demand zone here, this demand zone right here. Folks, when you are in a demand zone and you get across to the upside, take the trade. I mean, just take the trade, folks. I mean, keep a tight stop, but take the trade out of those demand zones. And again, this is with all the lines on the chart. That's a lot of lines. You clean it up and it looks like this. But anyway, now as far as the rest of the day, I mean, it ran up and then it just kind of, it didn't necessarily fizzle in here. We had a cross to the downside, cross to the downside. And I think it took that third cross, 1 cross, 2 cross, maybe 3 or 4 crosses in this area. But it just price action turned to be not the greatest after this run to the upside. Again, we got into this demand zone, used it as a little bit of resistance, and then it didn't do a whole lot the rest of the day. Now, here's what we're going to be looking for tomorrow. So let's go ahead and do this. Let's just go ahead and kill every single drawing on the chart so we can kind of start with the old tabula rasa, the blank slate. Okay, so now let me see what we've got going on tomorrow as far as reports. So tomorrow's the 2nd. So tomorrow's October 2nd. So what we're looking for tomorrow morning in pre-market At 8:15, we have the ADP non-farm employment change, and that is a red folder event. Okay, so a red folder event, and again, that's the ADP non-farm employment change. Again, red folder event. So we're going to pay attention to that. Now, because we're trading options, we can't trade options in pre-market. So again, that's going to come out in pre-market. So what we're going to do is pay close attention. Now, if we get a big move either way, all bets are off. But again, these are the levels that I will be looking for tomorrow. If we move back to the downside again, we do have this demand zone right here. So, but let's go a little bit further. Let's go a little bit further down. We have this demand zone right here. So this is a level that I'm going to look at. Again, again, that's the same level that we had today. It's the same level we bounced off of, 565.97, 565.98. If we work down to this zone and get a bounce out of this zone, I'm going to be looking for calls. And again, everything hinges on what happens overnight. We don't know what's going to happen with the futures. Now, we have two really, really big things that are going on right now. Iran lobbed a whole bunch of bombs at Israel today. So that's bad. That's really, really bad. That creates, it can create an awful lot of indecision in the market. If the United States gets dragged into this thing, number one, the market loves war. You can just go back to February 24th, 2022, and look what the chart did on the day that Russia invaded Ukraine. Again, February 24th, 2022. You can see what it did. It ran down big time in pre-market, then it ran up $18. It was the biggest one-day move in SPY, I do believe, in the history. Again, $18 from top to bottom. We had a $15 move from bottom to top. And again, that's because the market loves war. Now, the second thing that happened today is there's a longshoreman strike going on. So the market really didn't react to that. I thought it reacted to that a little bit more strongly than it did today. Again, it didn't do a whole lot. So again, we have those two major catalysts that we're going to be looking at tomorrow, plus the non-farm payroll. So any one of those things can really move the market. Now, when you take all three of those, it can have a big effect on the market. Now, let's take a look. If we start moving low, if we start busting through levels, folks, we're going to have to look left. I mean, where are we looking? Again, look at all this thin volume down here. This is really, really thin until we get to about 563.89. And again, that's a $4 down here. It could do it. We never know what's going to happen. But again, let's look at our double bottom. So essentially the closest double bottom that we're going to have down here by looking left is right here. So 561.31. I actually talked to the group about that level today. So 561.31. Now, the POC on the 30, which is, again, this is the long-term point of control. It takes 100 30-minute slices, 30-minute market slices into account for this level. Again, this is where most of the money has been traded on the 30-minute over time period. But you can see, again, this is the yellow line, the golden line, point of control. You can see the thin volume. It's going to slow down if we get here. It's going to slow down, then all the way down. Now, again, these are the levels that I'm looking for to the downside. But again, a lot of this is going to hinge on what happens with futures overnight and how SPY opens up when we get to pre-market in the morning. So again, we're going to be looking at these levels down here. These are the major levels that I'll be looking at. We've got some minor levels in here, but we started taking out these levels. So again, we're going to look at that 565.97. Now to the upside, what are we looking at to the upside? Again, we're just going to look at the 30-minute chart. Well, we know, and again, we don't know what pre-market low is. We don't know what pre-market high is. So we're just going to say, okay, well, based on the 30-minute, we know we have a good, strong supply zone right up here. Again, we're going to look left, and we're going to go, okay, so it's basically 574.03. A double top, we're going into close, actually, yesterday. So we had this 30-minute and then this double top that we made we made this right, as we went into close yesterday and then after hours. Now, from an all-time high standpoint, we're really close, folks. So we can also lay the all-time high down right in here at about 574.21. That's going to be just a little bit above the supply zone here. So these are the levels that I'm going to be looking at tomorrow. And again, folks, let's see what we do in pre-market. Let's see what we do in pre-market. Now, tomorrow, what we're going to do for the video tomorrow is we're going to talk about how price action actually responded or reacted or worked out of these zones. So into these zones and out of these zones, and then the best way to take these. So let's talk about that a little bit real quick. If we get down to this level right here and we bounce around, we're going to make the assumption that we have a, number one, it's a demand zone here. We've proved that before a couple of different times, twice, right here and right here. So it's a strong demand zone. So essentially what they're saying is we're going to defend this position from going any lower. So we're going to throw volume at it. We're going to throw money at it to defend our positions at this level, realizing that it's thin down below. It wouldn't take a whole lot of volume to push through that area. Now, if we push through and make it down to this level right here, number one, you got POC right here. So that can act as a magnet. Number two, that level down there, 561.31. Again, if we start cascading down, watch your levels down below. Now, past that, I mean, we can look left and we can find all these different levels down here. But what you can also do is you can just use volume profile and say, okay, this is where, if we start hitting levels, look at your high volume areas right in here. And you can use those for support and resistance as well. Or targets along the way. But again, these are the levels that I'll be looking at tomorrow. And again, when it opens up tomorrow, we don't know what's going to happen. Again, we have those three things. So we've got potential war. We've got the longshoreman strike and the employment numbers tomorrow. So those are the things that we are going to be looking at tomorrow. So that's about all we have for today, folks. But remember, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is just about every day and sometimes on the weekends. Also, if you are interested in live daily trading, so folks, we go over every single one of these trades, and you've seen me do live. I go live during the middle of the day and I talk through these specific trades. I talk through every single trade. So whether it's to the upside or the downside, and I'm talking about what I'm looking for, or if I'm in a trade, I'm talking people through a trade. I'm also talking myself through a trade. Okay. So anyway, if you're interested in live daily trading, head on over to our live trading Discord. It's called Trading Decoded. The link for that is down below. Check it out. We're going to give you that first week for free. If it works for you, great. We'd love to have you as a full-time member. If it doesn't, hey, send me a message and let me know what we can do better as a group, folks. So we would greatly appreciate that. Now, if you are interested in the 920 crossover strategy, head on over to 920trading.com. Again, the link for that is down below. And the entire strategy is right there, folks. The entire strategy is right there. So we talk about crossovers. We talk about demand zones. We talk about supply zones. We talk about different ways to trade the 920 strategy. There's multiple ways. There's aggressive ways. There's double cross. There's just different ways to play. But anyway, head on over there. You don't need to spend thousands of dollars on a strategy, folks. Again, 920trading.com. Go check it out. Anyway, thank you for spending a little bit of your most precious commodity, which is your time. We appreciate all the time that you spent with us this afternoon. I hope everybody had a great day today. There were a lot of opportunities, a lot of really, really nice opportunities to the downside and then back to the upside. But I hope everybody had a great day. But above all else, I hope you followed your trading plan. So whether it was a red day or a green day, the only thing that matters is the process. Process. But anyway, I hope everybody has a great rest of the afternoon. We're going to do it again tomorrow. So until then, folks, we will see you in the markets.